Hi everybody, this is Eddie Ghabour, Managing Partner of Key Advisors Group. Please like and subscribe to our YouTube channel. We're pushing out videos every week with a lot of this content being actionable content that you could look at to apply to your potential situation based on your risk tolerance, as well as sharing with you our live market thoughts in regards to how we are positioning. So it's not just educational in nature. Some of it is live, actionable things that you can do if your risk tolerance is in line with what our market thesis is, okay? So with that being said, what I want to talk about today is crypto, okay? And why crypto has been ripping over the last 4 weeks since it's seen the bottom sometime in September, in the relationship with crypto and the overall risk assets. So I happen to be one of the folks that was wrong about crypto years ago. I did not believe in crypto. I really was very skeptical about it. I'm not afraid to admit that. I think as an investor, one of the biggest mistakes you can be is be hard-headed and not admit when you were wrong. And I was dead wrong on crypto years ago. And then as I've educated myself on it, I happen to believe that certain crypto is here to stay. And this millennial generation knows nothing other than crypto in regards to the value that it can bring. So because of the millennial generation, because of myself educating in regards to what crypto has done in the blockchain technology behind some of it, is why I do happen to believe that it's here to stay as an asset class, and it can do really well in the right type of environment. Where I will disagree with some of the folks that are really into crypto is where they consider it to be a non-correlated asset to the stock market, okay? That has not, in my opinion, been proven to be correct yet, and until it is proven to be correct to be a non-correlated asset, I will continue to educate folks on the fact that I think crypto is highly correlated to risk assets. And crypto, in my opinion, does the best when it's a risk-on environment. And really all you have to do is look at the chart for this year in regards to crypto, okay? Over the last 12 months, when you've looked at the risk assets really spiking, crypto has really ripped much higher than the risk assets. And then when we've had big corrections, we've seen crypto correct even more than the market. So I look at crypto as a very volatile and one of the most volatile asset classes that you can own. And so again, you have to have the risk tolerance to be able to sustain this volatility. But I think it's very simple. You know, when you take a look at why crypto has been leading the way on risk assets here over the last few weeks, is take a look at what risk assets have done. You know, small caps, for example, have really ripped back up, and crypto is following that. And small caps, in my opinion, are considered some of the riskier stocks that you can own versus some of your more large cap stable companies that maybe have a better balance sheet. And so the fourth quarter looks like we are really setting up for a reflationary trade, very similar to what we said we would see in the first half of 2021. So if the fourth quarter of 2021 looks anything like the first half of 2021, our expectation, and again, we could be dead wrong, would be that crypto will probably be the asset class that leads the way because it has the most risk, it has the most volatility, and when you have risk assets going up, and you're seeing some major volume spikes on up days, that's really, really good for crypto. So our market thesis for the fourth quarter is extremely bullish. Will we get some dips along the way? Of course, that's my opinion. We'll probably get anywhere your garden variety, 1 to 4% drawdowns. We are not expecting a major drawdown like some people were predicting last month. Again, we could be wrong, but that's our opinion in regards to the market. And so if our market thesis is correct, we believe that crypto will be one of the leading asset classes. You know, some of our favorite sectors right now are energy, financials. We like the small caps here because, again, these are some of your riskier, higher volatility plays, and they traditionally, with a setup like we've seen, lead the way. I personally believe that if that thesis is proven to be correct, that crypto should outperform all those asset classes. Now, look, with that being said, it is extremely aggressive. It's an extremely volatile asset. And so you need to figure out for your personal portfolio, what percentage of asset allocation do you want aligned with crypto? And once you have that, you want to stick to that discipline, rebalance when it goes over that weighting, and potentially add to it when that weighting comes down. Now, I will caution you, we are not optimistic on the markets in the first half of next year. Again, our opinion is inflation's going to really continue to stay hot, and that's going to put a drag on GDP in the first half of next year. So if we get decelerating GDP with inflation that stays hot and a Fed that is tightening, you could see a double-digit correction in the capital markets. And if that happens, again, my opinion would be that crypto, as it leads it on the way up, also leads on the way down. So this is a short-term thesis in regards to crypto. Long-term, do I think crypto is here to stay as an asset class? Absolutely. But no, the path getting there is not going to be a smooth ride like other asset classes. So we're very bullish on crypto in the fourth quarter because we think it's a risk-on trade. And again, it's not for everybody. You have to assess that at your own risk. So that's our take on crypto. I hope you enjoyed it. Any questions you have, please send it to my inbox. I'll make sure I address it on future videos that we'll send out. And please remember to like and subscribe to our YouTube page. Thank you.